Hello everyone, good evenings. Okay, so for those who are here together with me, appreciate if you can help me to hit the like buttons for me. Help me to share this out. All right. Again, before we start, a quick disclaimer: this section here we are not doing any buy and sell call. So if you want to trade any stocks that we discuss in this section over here, make sure you got own trading plan. If not, get advice from the professional. Now, in this section here again, we do invite against Dato Yu to join us. If you have followed Dato Yu in our this Facebook series, I think last month he did talk about gold followed by oil counters. Okay, and this section here we're going to look into a new sectors which is looking into steel counters. Okay, so let's see. What is the potential opportunity we have moving forward for steel counter in Bursa. So I will pass the floor to Dato to start our section in this evening. Dato, I pass it to you.
Hi, can everybody see the screen? Okay.
Yes, Dato, the screen is
Okay, good.
is good.
Let me put some disclaimer first. In the 90s, I was running a steel company called Kenzen, and we were doing stainless steel pipes. So I'm a bit familiar in that industry. And one of the characteristics of the steel sector is that every time there's an increase in raw material prices, the steel companies will take advantage and increase prices, okay, to the consumers, and that's how we drive our profits. Okay, so whenever I see changes in steel prices, especially if steel prices are going up, I see that as a leading indicator of improving profits for the Malaysian steel sector. Okay, so that's the background I'm coming from. Now, the other thing is that I invest in steel companies. I invest in some of the Bursa steel companies. So I won't tell you which steel companies. And so I'm going to share with you some of the things that I look for when I look at these steel companies. Now, what I will do today is just basically start off with an overview of the sector, give you an overview of the steel sector, and then I will dive deep into two stocks, CSE Steel and A Steel, okay, to represent what I call the steel flat products sector. Okay. Now, there are many ways to classify the steel sector. Internationally, of course, people classify them in terms of upstream, midstream, and downstream. And the upstream guys, the real upstream guys, are the guys actually producing steel from iron ore. Okay, so those days, if you are old enough, you remember that was what Waja was trying to do. They import in the iron ore and then melt it in the blast furnace to produce the iron, and then they add in the various components, elements to then produce the steel. Okay, this is known as the upstream production. And in Malaysia, apart from, Waja has closed down, there are one or two smaller players still producing steel, but the bulk of the raw materials will now be focused on scrap rather than try to produce it from iron ore. So we have the upstream players. I don't think any of them are listed directly. We have the midstream players, which means they buy the slabs from the upstream mill and then they roll it, into flat sheets, which are then used by the downstream people to produce pipes, scaffoldings, and of course, a lot of steel is used in the car manufacturing sector. Now, in the Malaysian context, we tend to not classify them in terms of upstream, midstream, or downstream. We tend to classify them by the shape of the products. So we have flat players, and these are people who actually does, the steel plates. We then have the longs. So these are the steel rod producers, the people who are producing the steel purlins, And then you have what I call the tubular people, the pipe producers, okay? Whether it's round pipes or square pipes, the hollow pipes. Okay? And then of course we have people in the steel coil or even the what I call the steel lighting industry and so on. So this is how we tend. So when you look at the Bursa companies and you ask for steel companies, you find out that actually they tend to classify them in terms of the flats, the longs, the tubulars, and the others. Now, what I want to do today is focus on the flat sector, okay? Because that's basically the most upstream sector in terms of the Malaysian Bursa companies. And when you look at the steel sector in Malaysia in terms of the flats and the longs, the bulk of the flats are still imported. Okay, I think 90%, I think is probably last year, one of the past 2 years paper. A lot of the flat products are still imported into Malaysia because there's not enough flat manufacturers in this country. And like gold and oil, the steel sector is cyclical. Okay? And I'll share the chart with you after to show what I mean by cyclical. Now, the key problem with the steel sector is that there's global overcapacity. Okay? This is actually caused by China, who has been building steel plants far in excess of the global needs. So globally, everybody is suffering from overcapacity. And Malaysia is not spared, so that when you look at steel plants in Malaysia, whether it is especially the flats or even the longs, a lot of them are underutilized in terms of the capacity. Okay? And it is a problem that I don't think anybody is able to solve. It is an underutilized. It's a sector where there's a lot of unutilized capacity. Now, in the Malaysian context, we have more long producers than the flat producers. Okay, and a lot of the longs are actually exported. So it's not just consumed locally, but also exported. So when you look at the flat steel producers, okay, there are currently about 6, which I would consider as the real flat producers. That means that these are people, and you can see the names listed there: A Steel, CSC Steel, Ion Metal, Hyaptic, Mayu Global, and Micron. These are what I call the major players about 5 to 6 years ago. Okay? And when you look at in terms of size and so on, in terms of revenue, the 2 big guys you can see today are basically CSC Steel and Hyaptic. Okay, but in terms of the total asset employed, it is Hyaptic. Now, I'll tell you a bit more about these companies later on. But what I want to do is to show you that it is a tough sector. Okay, so when you look at the revenue over the past 10 years, for example, there was hardly any revenue growth. Okay, so you can imagine, over the past 10 years, we have inflation about 3 to 4%. Now, goods by today we're 40% higher. The steel company's revenue has remained more or less static. Okay, for the past 10 years. Profits are a bit more volatile, and you actually can see some uptrends in the profit, basically because while people reduces the volume, in times of high steel prices, they take opportunity to increase the price, and that's how they make money from peaks. Okay, so you can see the last peak was about in 2021. And then before that was 2017, 2018. Okay, and the peak occurs basically because of the global steel prices. Now, if you look at this chart, you can see that, and these are charts showing steel prices from Europe, from China, from US, and historically, you can see a close link between them. Okay, so if steel prices goes up in one region, eventually you'll find out the steel prices will go up in all the other regions. Now, one of the things that's happening today, okay, or at least over the last couple of months, is that because of the Trump tariff, there's a slight disconnect between global steel prices. So, for example, the US steel prices has gone up by almost 30 to 40% since the start of the year. Okay, and a lot of it, of course, is driven by the tariff and people buying, creating the demand, buying in before the tariff hike came in. So if you look at steel prices in the US, it's gone up by 30 to 40%. Steel prices in Malaysia, the hot roll have not moved. Okay, China prices supposedly have come down a bit. European steel prices have gone up by less than 5%, I think. And then the other major steel producer in the world, India, prices have in between Europe and China. So I'm waiting to see whether and at what stage the global steel prices would sort of come together. Because if we imagine that if US steel prices has gone up by 40% and the Chinese tariff is 30%, I can imagine imports from China exports from China going to the US to meet some of the demand. So eventually you will see the global steel prices converging. And when that does, I would expect steel prices to be higher in the next couple of months than what it was today, even for Malaysia. So, but at the moment, there's a big disconnect. Okay, and I'm taking the view that eventually we will see a convergence of the global steel prices because of the global supply chain and the global overcapacity. And I don't think it's going to be the 30-40% of the US, but it definitely is going to be higher than what it was today. Okay. Now, leaving aside the cycle nature of the steel sector of prices, you can see that because of the cycle sector, okay, the returns are very cyclical. So when you look at steel companies, for example, you can have in the good years a 12% return, and then in the bad year you just break even. Okay, so the trick is when you invest in the steel companies, you don't go in when it's at the peak of the cycle, because if you look at what is happening over the past 10 years, for example, it goes up 1 or 2 years, it comes down. So if you go in at the peak of the cycle, okay, thinking that it would last a long time, you'll be shocked, because in a few years, 1 or 2 years time, you'll decline. So the trick is actually to go in at the bottom of the cycle. And the picture that I'm painting is that steel prices have not moved. So if you think that steel prices are going to go up over the next 1 or 2 years, then this is the time to go in. You don't go in when the prices are at the peak. Okay, it is a very volatile sector. Okay, and if you're going to invest in steel companies, you make use of the price cycle. Now I must tell you that over the past 20 years, I've gone in 3 to 4 times making money from the same company. So basically, you go in when they're down. When you reach the peak, you sell, and then you wait for it to come down, you go in again. Okay, and because you are familiar with the company, okay, and you know it's cyclical, it gives you a repeated chance to make money from the same company now. Okay. Now the key index that I look off, okay, is not the return on equity, because that's looking at it from a share perspective. The key operating index is what I call gross profitability. That means you look at the gross profit margin divided by the total assets. Okay, and studies have shown that this is a better indicator of the operating efficiency of the company than all the other metrics. So I tend to look at gross profitability to give you a picture of where we are. So when you look at the Malaysian steel sector, for example, okay, the gross profit has not been growing, but when you look at what is happening over the past 1 or 2 years, even though steel prices have not changed a lot, you can see the operating performance trending up, at least for the smaller and the medium companies. And I see that as a good sign, because if you look at the cyclical pattern, I would expect this cycle to be repeated in the coming 1 or 2 more years now. So eventually it'll go up, and then eventually it'll come down. Okay, but this is a good indicator to give you a picture of, are we at the bottom? Because I think it does indicate that we're at the bottom. Okay, as far as the Malaysian steel sector is concerned, and I would imagine that at the peak, it's going to be okay. If today is going to be 3 or 4%, at the peak is going to be double or triple in terms of the return. So that's the picture that I'm trying to paint for you. Okay, now the beauty of the Malaysian sector is that over the years, okay, the big boys have been shaken out, so that today many of the players been in the business a long term. Okay, they are financially sound. Okay, but one of the things that you have to do is that it is a tough sector to make money. Okay, and I'll tell you why. Okay, now this is the 6 companies that, if you look at it 5 to 10 years ago, they were very big in terms of the flat steel production. Okay, now AS Steel, okay, couple of years sold off part of the business because they were not making money. So today they are much smaller than what it was 10 years ago. Mayu Global have effectively gone bigger into property development and given up the steel production. Okay, Ion Metal, okay, they were very big 10 years ago in terms of the upstream flat steel production. Today, they are more into roofing sheets, steel shelving, and so on. Okay, and they actually, part of the business is actually manufacturing steel, providing, selling steel manufacturing facilities to companies. Okay, so when you look at the sector, okay, and you look at those who are still today doing what they were doing 10 years ago, then you will probably have people like CSE Steel, Micron Steel, and Hyaptic. Okay, it's a very challenging sector. Okay, and over the years, a lot of people given up. If you look at the Perwaja history, you will know that you can understand how difficult it is, okay, to make money from this sector. But those who find a way to overcome the challenges and so on, and are left standing today, will face less competition, leaving aside the imports now, okay, compared to 5 or 10 years ago. Okay, now what I want to do now is focus on the 2 companies, okay, using referring to the fundamental mapper as my driving point. Okay, and the fundamental mapper, for those of you who are not familiar with it, is our app that we have created where we put the business performance on the horizontal axis. So on the right means they are very strong business performance. On the left means the business performance is not so good. And then the top, the vertical scale shows the investment risk. And I define the investment risk between, from a fundamental perspective. So high risk companies are those where the market price is greater than the business value. Low risk companies are ones where the market price is much lower than the business value. Okay, so the 2 companies that I've picked, CSE Steel and A Steel, both are considered relatively safe. I think I use the word inverted commas safe. Okay, but in terms of business performance, CSE Steel is at the borderline between what I call the gold mine quadrant and the turnaround quadrant. That means average business performance based on the last 6 years' performance. Whereas AS Steel, okay, in terms of relative business performance compared to the other steel companies, it is actually not, from a fundamental business performance, it actually does not stand out very well. Now, CSE Steel is, to give you a bit of background, is part of China Steel Corporation of Taiwan. Okay, they have been in Malaysia. I mean, I used to buy cold roll from them in the 90s when we were doing steel pipe. So they have been in Malaysia since the 90s. Okay, and they are run actually as a subsidiary of China Steel Corporation. Okay, so what they do is that I think the CEO and the CFO and even the technical guys seconded from Taiwan. They spend a couple of years here and then they go back and then they rotate in. And the what's the word I would use? The governance and the policies and so on are actually determined by Taiwan, for one or a better word. Okay, and Malaysia is purely seen as a manufacturing facility. They buy their raw materials, which is basically the hot rolled coil, from the Taiwan companies or their sister company of Taiwan. And basically what they do is then they re-roll it into cold rolled steel coils and sell it to the Malaysian market. Okay, and they have been doing it for past 20, 30 years, go through the cycle. Good times, they do very well. Bad times, they don't lose money. In fact, I think over the past 20 years, there's only 1 year they actually lost money. Okay, a very consistent performer. Okay, but if you understand enough of the steel sector, you will know how to actually go in and with them now. Now, A Steel is a rather sad story in the sense that they were very big, as you know, in terms of production years ago. Then they had problems running the upstream. That means the cold rolling. You know, they were doing exactly what cold rolling and galvanizing, what CSC still do. And I think a couple of years ago, they decided to exit the upstream. Okay, so they sold off the plant to the Australian group, okay, Blue Scope, I think, the Australian group, okay, who is running it as a Sendirian Berhad today. Okay, and today they are focusing on what I call the downstream type of activities rather than actually upstream re-rolling. They have a strong presence in Sabah and Sarawak, where they actually buy in the coils that you see here. They coat it. You know, sometimes they sell the coated steel. Sometimes they use it in house. Okay? But in terms of size and so on, they were not what they were relative to AS Steel 10 years ago now. So, for example, this gives you a picture of the size in terms of revenue between CSC Steel and AS Steel. Okay, you can see the China Steel Corporation much bigger than them. Okay, and when it comes to profits, AS Steel had a restructuring in 2018. I think they closed down. This was the period when they decided, oh, it's a tough sector. I'm going to sell off my facilities, you know, and get out of that particular sector. Okay, and today they're still struggling to return to profitability. Okay. Now, again, tough sector, margins are cyclical, okay? But one of the interesting things you notice is that when I did a correlation between the revenue of these two companies and what I call the steel prices, okay? And I did it with a lagging, that means the steel price for this year, okay? I compared it with the revenue of the steel companies 1 year later, okay, on the basis that when you buy the raw materials, you don't produce it, so there's a time lag. You find out that even if when you take the time lag into account, there's a very high correlation between steel prices and the revenue of these steel companies. Now, normally, my cutoff point is 70%. So if you have 0.7, I would take the correlation as good, okay? So you can see that both of them have almost 80% correlation, which means that when steel prices moves today, okay, this year, next year you can expect their revenue to go up, and as the revenue go up, because their tonnage is about the same, they sell the same tonnage every year. The revenue growth comes from price increase. So when price increase goes up, their profit will go up. Okay, so this is a sector where the performance of the company has a very strong correlation with steel prices, because steel is a very major component of the production cost, okay? Far more than people's costs and so on. These are capital intensive industries. So when steel price moves, you see revenue moves, you see the profit moving. Okay. So unfortunately, over the past 10 years, the profits has not been good, especially for AS Steel. Okay. But one of the things that you notice is that it is a very concentrated industry. Okay, so as far as CS Steel concerned, two customers accounted for almost 30%, more than 1/3 of the business. Okay, AS Steel is probably much more diluted, but irrespective of this picture, because this picture has been there for past 20-30 years, you don't have to worry too much of the customer concentration, because the customers tend to be big companies, okay, and this, because of their long history and so on, the customers are much more secure than those serving the smaller sectors. Now, the challenge for AS Steel is that they are much more leveraged than CSC Steel, okay? And when you look at it in terms of, and I will come back to it, if you look at CS Steel today, for example, 40% of the total assets are cash, okay? Now, they are a Taiwanese company. one of the good things is that they don't really channel back all the monies back to Taiwan. So a lot of the assets that you see here are actually cash form. Okay, compared to A Steel, okay, where only 3% of their total assets are cash. And when you look at what has happened over the past decade, 8 years out of the past 10 years, CST for 8 years have been positive cash flow from operations, whereas A Steel has a much challenging financial position. Okay. Now again, I won't go a bit more details into how I compare them and so on, but the point I want to make is that when you compare these two companies, okay, you find out that when you talk about top line growth, returns, and financial, of course, CST still stands out. But one of the things that I want to highlight is that when you look at A Steel and post their restructuring, okay, you'll find out that A Steel today have 3 times better contribution, okay, margins compared to CST Steel. They suffer because they have interest charges because of the low cash position, okay, whereas CST Steel is almost debt-free. Okay? And A Steel problem today is because they don't sell enough. It is a revenue problem. Okay, so because of the lower revenue, their fixed cost margin, is 4 times higher than CST Steel. Now, when they get their act together and increases their sales, okay, it would translate into what I would call CST equivalent returns. Okay, so if you're looking for somebody who's going to go and turn around the business, A Steel is one that I would look at. Okay, CST Steel is definitely a market leader. It's a question of timing your buying and selling. Now the challenge with steel industry, and this is what I've shown in both the gold sector and the oil and gas sector, is that the sector is cyclical, and because of the cyclical sector, where if you're going to value the company, what you choose to represent the cycle is important. So when you look at the steel sector, for example, okay, what I normally do is that the steel cycle, if you look at it, is a much more shorter cycle than the oil and gas. So when you look at it, the peak to trough is about 3 to 5 years. So that when you are trying to understand the cyclical performance, I think taking the past 5 years performance gives you, give you a good picture. So when you look at CST Steel, for example, based on the past 5 years performance, average performance are not today's performance. They are trading at a PE 10. Okay, A Steel is still losing money because they're just going through the restructuring. But when you look at the book value and you look at the cash per share, okay, CST Steel is effectively trading only, slightly above the cash per share. Okay. Now, for those of you who are fundamental investors, there's a metric that we call Graham net. Okay, and this is calculated by taking the total assets, the current assets minus the total liabilities divided by the number of shares. And the Graham net is a shortcut for the liquidation value. So when you liquidate the company, for example, you assume your fixed asset is 0. You have your current assets, which is basically cash in case of CST, cash and your working capital and so on. And you minus off all the liabilities, you find out that in the case of CST Steel, that liquidation value is $2 per share. The market price is $1 per share. And you're wondering, why is the market, trading at half the liquidation value when this is a company that is profitable? This is a company that, today has, like I said, $1 per share in cash. And this is a company that has been in Malaysia since the 1990s, and the only conclusion I would draw is that, because of the cycle nature, for for those of you or those of the people who are just looking at current performance and not looking at the performance cycle, they would then say, the current performance is very bad. This is a bad company, and there's no hope for them anymore. And I think from a fundamental perspective, this gives you a very good entry price level. So to sum it up, if you look at the fundamental mapper, I think you can understand why CSC Steel, in terms of the business fundamentals, is much better than AS Steel. Okay, both of them, when you look at the valuation relative to the asset value, I think the word I used. Okay, they are definitely trading below their assets value. Okay? And I hope you can understand why, in the fundamental mapper, AS Steel is actually classified as part of a turnaround, because they are going through a process. I would expect that over the next couple of years, their business performance will move, okay, to the right, okay. And if you're looking at this company, you hope that as they move to the right, the price remains low, giving you a chance to buy. So that's basically my take on the steel industry. Disclaimer, this is for educational purposes only. And for those of you who have not downloaded the fundamental mapper, scan the QR code and download it. The conclusion, I think that there are two key messages that I want to leave with. This is a very cyclical sector, a much more shorter cycle than the oil and gas or even the gold sector. Okay? And it is much more volatile because of the short cycle as well. It is much more volatile in terms of the returns. Okay, so when you look at the returns at the bottom of the cycle compared to the returns of the top cycle, you can see a difference between 3 to 4% at the bottom to 10, 15, 12, 15% at the peak. Okay, and a lot of investors make the mistake of buying the companies at the peak, thinking that the 12 to 15% would sustain. Okay, unfortunately, it doesn't sustain; it will drop. Okay, and so if you're going to invest in the steel sector, go in at the bottom of the cycle. Okay, don't go in at the top. All right, thank you very much. If you have any questions, I'll be more than happy to answer them.
Okay, thank you, Dato. So for those who are watching together with us, if you got any question for Dato, feel free to comments at the comment section below, and we will get Dato to help us to answer it. So of course, I think in terms of technical analysis as well, I think I have to agree with Dato. So seems like CSC is still currently doing pretty well in terms of trend. Yes, even though I think there have been like in the sideways range by looking at the weekly chart since 2021, but it looks like they got a chance, okay, to retest around 1 ringgit 40 cents, okay, in the short to mid-term time frame. Okay, any questions to Dato? Okay, let's say there's no question. Once again, thank you for joining us in this section over here. And again, we will invite Dato come back to this section again 2 weeks from now. And of course, like I said, if you got any specific topic that you want Dato to cover, like for example, this week we have a topic regarding steel, do let us know, okay, through WhatsApp. Okay, you can PM me and we definitely get Dato to cover it, okay, for us. So once again, thank you, Dato, for joining us.
Okay, all right. Good night.
Okay, good night, everyone. Thank you.